Howdy, boys and girls. It's Raymond Dahlman here with the weekly wrap-up for October 15th, 2021. I hope everybody had a terrific week. It's been a good week for baseball fans. Houston Astros going to the ALCS, playing the Boston Red Sox tonight at 6 o'clock, about an hour from now. So I know this is a little later than normal. I had to go run some errands before baseball game, go get a pizza, pepperoni and black olive, my favorite. So it's going to be a good weekend. We got baseball today or tonight and tomorrow afternoon. They play at 2 p.m. Mountain Time, I believe, tomorrow, or 3 p.m. Central. And plus lots of college football. So I am boycotting the NFL. I haven't watched a single game this year. And until they get their shit together, I have no plans of paying attention to them. So definitely an interesting week in the market. It's been the last 2 days have been quite well, depending upon how you look at things. We did have a nice bounce back in the indexes. So let's go ahead and let me share my screen so you can see it. All righty. So here's the Dow Jones this week. It looks like it was up about 1.52%. Not too bad. As you can see, Monday, Tuesday, and Wednesday were a big slide. Yesterday, we had a nice rally. I think some of it has to do with the Fed's rumor, or I don't want to say rumors, but the speculation that the interest rates are going to start climbing because inflation is so bad. So we will see what happens there. The S&P 500 was up 1.71. NASDAQ, take a look there, up 2.13. The Dow Utilities up 147, and the Dow Transports up 3.78. So that was the leader so far as the indexes I have here on my chart. So not too bad. Let me zoom out a little bit, and we'll take a quick look at the Dow Jones with some of the. And maybe a little hard to see, but you can see here where I've added a new line of resist, or a resistance line here, or trend line. And the last 2 days appear to have broken through that. We'll see if this trend continues. Just something to pay attention to. If it falls back between these 2 points, I would say that the downtrend will continue for a while. But this is charting 101. So pay attention. And this is in meetings, I know I talk a lot about this stuff. But anyways, all right. Well, let's go ahead and jump over to what's going on in the world. As far as initial jobless claims this week, we came in at 293,000. The forecast was 316. Last week's numbers were revised up 3,000. So again, nothing too bad. Still under the forecast for last week. So it is good to see a 2 in front of those numbers. If you recall back, I know I've talked a lot about, before the COVID, our typical week was about high 100,000s, low 200,000s was a typical unemployment or initial jobless claims. Let's take a look at the continuing. Came in at 2.593 million. The forecast was 2.675 million. Last week's numbers were revised up slightly from 2.714 to 2.727. Again, still below the forecast for last week and below forecast for this week. So some good news. Maybe people are getting off their asses and going to work. So, all right. The rig count, I know I talk about this most weeks. We're up to 445 rigs online. The forecast was 437. You can see we had about, a 12 rig jump over the last week. So again, these numbers continue to climb. We're heading out of hurricane season. So as long as we can avoid any major storms in the Gulf, we should probably be clear to smooth sailing for the oil and gas supplies, and should definitely help with the cost of gas at the pumps right now. All right, so I did have a couple articles I did want to share with you guys. This can be a quick one since, like I said, baseball's coming on in less than an hour, and I gotta get prepared. I gotta get stretched out and limbered up. So the first article I wanted to share is comes from CNBC, and the title is "Foreclosures are surging now that COVID mortgage Bailouts are ending, and but they're still at low levels. So, which is certainly good news. So the key points: pandemic-related mortgage bailouts are ending, and foreclosures are now rising. Foreclosure starts jumped 32% in the third quarter, and from the second quarter, and we're 67% higher than third quarter of last year. So actually, I talked about this with someone I was speaking with earlier today, and this 67% jump number, while I would agree that that is a large change. A year ago at this time, there was a moratorium on foreclosures and evictions. So it's, in my opinion, not really a fair number. I would probably look back 2 years from now, or 2 years ago, or 3 years ago to see, what in comparison, or how we compare to those years. Because last year was just weird. The foreclosure numbers should stay relatively low because of aggressive modifications by lenders, and also because of high levels of home equity. Alrighty, so let's start out. Foreclosures are starting to surge as government and private sector programs designed to help homeowners deal with the economic fallout of COVID-19 pandemic have begun to expire. Mortgage lenders began the foreclosure process on 25,209 properties in the third quarter, a 32% increase from second quarter. On a year-over-year basis, that's a 67% increase from third quarter of 2020, according to ATTOM, the mortgage data firm. While the increase in foreclosures are dramatic, they are coming off extreme lows that were created by the forbearance programs. New foreclosures, also known as starts, usually number around 40,000 per month. They fell to as low as 3,000 to 4,000 in the first year of the pandemic, when forbearance programs were in full force. Government and private sector relief programs allowed borrowers with financial difficulties to delay their monthly payments for up to 18 months. The missed payments could then be tacked on to the end of the loan period, or repaid when the home was sold, or the mortgage refinanced. States with the largest number of foreclosures were California, Texas, Florida, New York, and Illinois. Not really a surprise. These definitely the first three are like the highest population centers in the country. And Illinois has Chicago, or New York and Illinois have two very large cities. So not to be surprised. Continuing, despite the increased level of foreclosure activity in September, we're still far below historically normal numbers, said Rick Sharga, executive vice president at RealtyTrack, an Adam company. September foreclosure actions were almost 70% lower than they were pre-pandemic. Total foreclosure activity is still 60% lower than it was a year ago. Whether the increase is a prelude to something more serious or just a return to normal levels of foreclosure is one of the bigger debates going on inside the industry right now, said Sharga. Large numbers of borrowers are now exiting forbearance programs. The biggest weekly decline so far came last week. The number of borrowers in bailout programs dropped 11% week to week, according to Black Knight, a mortgage data and analytics firm. The number of active forbearance plans fell by 177,000, led by an 84,000 plan drop among FHA VA loans. As of October 5th, nearly 1.4 million borrowers remained in pandemic-related forbearance plans, representing 2.6% of all active mortgages. So I guess it's a good thing that only 2.6% of mortgages are in some sort of help status. That does give me a little less concern about a massive foreclosure situation across the nation, where you have, it brings down property prices, and that snowball effect of, people being, without a home, or, it just creates a lot of problems. So, all right, well, I'll go ahead and skip the rest of this. So, and then I have a second page here. This is Atom, ATTOM, the company they were just talking about, that shows the foreclosure starts. Here is the chart that they're referencing. And you can see right here in Q3 of this year, it is a slight tick up from the last, 6 quarters that we've been experiencing, the pandemic. But you can see back here prior to, the beginning of 2020 and prior, you can see that typically it looks like just under 100,000 foreclosures per quarter. So we have a ways to go before we get there. So I'd say give it 90 days, maybe 6 months, and we'll see where we're at. If people are back to work or wanting to go back to work, maybe this is a kind of a non-issue. Tack the payments onto the end of the people's mortgages. Bada bing, bada boom, and everything's okay. So, but we will see. All right. Then I did have one other article. I get a week or a daily newsletter from Crash, I believe it's called. Let me see here. The Daily Job Hunt. It's from crash.co. And not that I'm looking for a job, but you can see here, it's kind of a, little hints for people as far as, how to market yourself, things you need to think about when exploring the job market. So anyways, they had a link to this article, and it's titled 8 Signs You Need to Get Out of Corporate America. And I can quite frankly speak to that. I spent, my first 4 years of a real job was in the Navy, and that sucks, working for the government, because they're a bunch of idiots. And then I went to corporate America, spent a short time with a temp firm, and then got on with Citibank, and then spent 8 years in the collection and recovery side of finance. And different companies are, some are good, some are bad, but there is a lot of just mediocrity in those environments. And then the last 15, almost 16 years I've been doing this, partly as an employee for Ameriprise, and but since then I've been an independent contractor. So it is much nicer not to have to deal with corporate BS, but you also have to go out and kill your own dinner. So it can be tough. Anyways, all right. So number 1, you're not a natural brown noser. Smoozing is a requisite for the corporate world. Your talent and skills and the work you deliver, no matter how top notch, is not enough to get ahead. You could be far from the strongest link on the team and still get passed up for promotion in favor of some guy who just knows how to kiss butt. If you're not the type to cultivate this skill, you'll find the whole process abhorrent, and maybe corporate is not for you. I got passed over for a job. I was applying for a management position at Citibank in 2001. Gosh, so I would have been, 27, 28. And I was very impatient. I wanted to move up through the corporate track really, really fast. And the first time I had interviewed for a management position, I was told that I needed to get more experience, take on additional tasks, which I did, took on all this extra work, doing research and analysis. And then when I applied again, went through the interview process, got passed over for some dumb broad who came from a customer service position at one of the other call centers near us. And she couldn't even turn on and I know this because I was sitting off in an area all kind of by myself doing a special project. And, I was sitting near this person, and she couldn't even figure out how to turn on her desktop monitor or computer and how to log into the system. And I asked her, I was like, "Oh, so have you been in the collections world a long time? Why did you decide to come over here?" She's like, "Oh no, I've never been in collections. I was a customer service manager for 10 years. I'm just like, I've got 3-4 years of collections experience under my belt. I'm busting my butt trying to move up, and they bring in some waste of oxygen who can't even operate a computer. But hey, she had the requisite experience. So I guess that's what was necessary." All right. Number 2, phonies make you sick. Ever had a conversation with someone in the business world where you can tell they're not really listening or not really there? Laughing at jokes like a zombie chorus when jokes aren't even funny, coming out with lines that sound like they're straight out of an HR ad, spewing corporatees left and right. So yeah, you get the point. You yearn to be in charge. Unfortunately, working for someone else, you never get to make those decisions. Benefits go bye-bye. You used to get great perks full of full benefits packages and corporate gigs, but nowadays more companies are cutting costs by passing those costs on to the employees. Keeping their workers loyal, healthy, and happy is not as much of a priority anymore as compared to with profit margins and appeasing shareholders. So, I haven't been my wife has a corporate job and they pay her very, very well, so I can't really complain too much. But if you're on the sales side of things, the bonuses are still very, very nice. You're not into being cutthroat. If you're not really someone who's going to backstab people or step on people, of corporate world may not be it for you. It's all about the money. No one cares about you personally in a corporate job, and certainly not your partner, your aging parents, or your kids. No one really cares about making a difference or saving the world, despite what their commercials lead you to believe. What they care about is profit. That's the bottom line. That is true, but also being on the side of the person who has to manage the QuickBooks, you got to have enough money coming in. The hours are too much to handle. It's one thing putting in ridiculous hours for a job you really love, one that's really doing something for your life and your career goals, i.e. doing what you love. It's another thing to entirely to be slaving away nights and weekends and after hours when you know you're not personally valued and the work you're doing isn't making much of a difference in the world. I can relate to that. And lastly, you're too creative. Never mind being too tenderhearted for the vicious Game of Thronesy work climates. You're just too darn creative for the structures and the monotony of meetings and memos that compromise the corporate 9 to 5. Maybe you find yourself unable to focus with all the meaningless noise. Maybe you're not productive on a normal daily schedule and work best from, say, noon to 6. Maybe your brain works Maybe your brain works best in fits of productivity with plenty of time to roam around and do other tasks in between and rest your juices. So you get the point. So yeah, that was the last one. So maybe if you're burned out, everything that's happened the last 2 years, you may be burned out in corporate America. So if this is a time, maybe they're telling you have to go get the jab and you don't want to, or, they're still making you wear stupid rags on your faces. Hey, you know what? Maybe it's time to, move out or move on and either look for a new career or find something you can do on your own. So it is nice. I'll admit it is great. I can go walk my dogs, exercise whenever, as long as I don't have any meetings or appointments, I'm pretty much free to do whatever I want. Granted, again, I have to go find my own business. So it's not like going to work and the work's already there for you to do. So, all right. Well, I hope everyone has a fantastical weekend. Watch plenty of baseball. And if anyone needs anything from me, feel free to give me a call, shoot me an email. I have no plans other than parking my butt on the couch. So if you need something, just give me a buzz, and everyone have a fantastic weekend. Bye-bye.